He heads up the largest public pension fund in the United States. CalPERS Chief Investment Officer Joe Deere is standing by with our special correspondent Willow Bay at the Milken Conference in Los Angeles. Willow and Joe, welcome back to InBusiness.
Thanks, Scarlett. Joe, nice to have you here with us. Now, as you've described it before, this is an environment with low rate of return, a fair amount of downside risk. Still the way you're seeing it?
Yes, it is. I think in investment, it helps to have a realistic perspective. And I think a realist appraisal now is that it's going to be really tough to get higher rates of return. Interest rates are so low. Corporate profits are at their all-time high. Is it realistic to expect more growth? What's going to power equity returns? And then the downside risks are everywhere, and some of them are really scary. So the short-term outlook, I think, is it's a very tough investment environment.
Now, you adjusted your rate of return to 7.5%.
Yes.
Part of your realistic thinking, as I gather. Are you expecting to have to adjust that again?
Well, our reduction from 7.75% to 7.5% expected return was based on a lowered inflation forecast. We're going to revisit our capital market assumptions, what we expect from fixed income, equity, private equity, and so forth later this year. So we're constantly reviewing that. Here's the thing. If you got a large portfolio, you can expect to make 7.5% over the really long term. But the risk in that portfolio exposes you to the chance of a significant drawdown in 1 year. And if you're trying to finance pension benefits, you really want to avoid those big drawdowns. So one way to protect yourself against that is to lower the rate of return and reduce the overall risk in the portfolio.
And any significant changes you expect to the portfolio? You said you're going to take a look at hedge funds.
We're looking at hedge funds, their role in the portfolio. We have about $5 billion invested in hedge funds, about 2.5% of our asset allocation. This is a basic question. What's the role of hedge funds in the portfolio? What's the benchmark? How do we provide capital for the program? And we're working with our board on that.
And you're going to make your decision on that when?
In the summer.
In the summer.
Yeah.
Talk to me a little bit about private equity. Still 14%?
14% of the portfolio.
Now, interesting time right now with these private equity firms going public, Carlyle being the next one up. How do you feel about how they're balancing their conflicts of interest? Now, Carlyle has said their investors will come first. That will be the priority. Does stating that up front and stating that so clearly help mitigate the conflict, or are they still wrestling with these
Carlyle is really important to CalPERS. We've invested with them for a long time, and it's one of our very largest private equity relationships. In addition, I should tell you that we're actually an investor in the Carlyle holding company, in the general partners.
So you're
we're interested
as conflicted
in this outcome.
as they are.
Right. So here's the. If you're a public company, the steady revenues are important, and that means the fees generated from investment. Now, as an investor, what I care about is the carry, the profit on the deals. So you watch the valuation of the private equity companies, and the market is discounting those longer-term profit production revenues lower than they are the fees. I think fees in private equity are too high. So the public status of the companies, I think, gives them more reason to raise them, and we want them reduced.
Now, I know you've been pushing a lot of companies, pressuring them on fees. Are you seeing any results? Are they willing to engage in a dialogue?
Yes, there is a possibility of negotiating. Now, there are some private equity firms whose record is so good and ability to raise money is so strong, they really present take it or leave it terms, and you just have to live with that. But there are many other firms where you can have a negotiation about whether you get flexibility in additional flexibility in return for lower fees, and it's all negotiable. And in a constrained investment environment where it's harder to raise money, the limited partners like us, the pension funds, have more negotiating leverage than we have had in the past, and we're really trying to make the most of that.
Joe Deere, thanks as always for joining us. We appreciate it.
Great to be here. Thank you.
Great.